All right. Hey there. Good morning, everybody. It's just a few minutes after 11 a.m. Central Standard Time here on an overcast Friday morning, March 4th, 2022, here in Boerne, Texas. I'm Chris Franks with Texas West Capital. And hopefully you guys are doing well. Got a lot going on. NFP, non-farm payrolls jobs report was released today. Sent the dollar surging higher, sent the euro diving lower. Bitcoin's still trying to find its bottom here on the pullback, but just be aware it's still only just a pullback. So I see a lot of people freaking out as always. If it doesn't, people are funny, man. New traders getting out there, and if price doesn't move up immediately or move up, after only pulling back a short bit, then they assume that the sky's falling and they go sell off in a panic, and then it kind of takes off without them. So we're going to take a look at that. We're going to take a look at what Bitcoin. We'll take a look at the dollar. We'll take a look at silver and gold and oil, TLT, junk, bonds, man, everything today, kind of checking what's going on. So hopefully y'all are doing all right there. We got Claudia. What's going on, man? We got Hank checking in. Hangry Patrick. Blaze is here in Evolution. Chris Baker, good morning, sir. Bamboo is here. Mark Chenard always checking in there, though usually he's eating lunch or something. Bill, what's going on, man? He says listening mode as he's driving. Data is here as well. And then we've got the idiots showing up already with their spam. Gotta love that, right? I hate to say that's like a clue that I've made it or something, but anyway, hey, listen, guys, you can join us here at howtotradetowin.com. We'd love to have you here. And by the way, guys, if you use this code SPRING40OFF, you can get a quarterly or annual tier 3 for 40% off, guys. So, you'll just click on this right here. It says, you go to texaswestcapital.com, click on that right there. It takes you to the other site we're still using for this. And then you go up there to join us. Let me see if I can do this here. There we go. And then right over here, tier 3. And then on your quarterly or biannual on that, you just click it, go to that screen. You go here, say quarterly, go there. And then instead of paying $507.50 there, go over, click to enter your code right here. Enter it right there. Spring 40 off. Apply coupon. Because we have people question, they miss this somehow sometimes. So that's why I'm showing you guys real quick. And as you can see, for basically just $100 more than a regular month, you can get 3 months. Or you can do it for the biannual, the 6 month, and get a significant savings off there and come join us. I do this because, man, we taught, every week. We've got 3 different live streams that I do with Tier 3. And I taught a technique on Wednesday, just 2 days ago. And had you used that with the Euro USD, you'd be up over 150 pips right now in 4 trades. So, that is just one thing. I used it on that, so that's why I'm bringing that up. But a very powerful technique, very easy to do. But you'll get access to that and everything else we've taught, the 200 plus hours of education we've got on there from the last year and a half plus. You'll have access to all that. So we'd love to have you there, guys. All right. What can be at? No, it can't. It's for new members only. The 40% discount is for new members only right now, guys. Okay. So, yeah, good question there. I gave current members a lot of discounts last year. So it'll probably be a little bit longer before current members we give you guys another discount. But if you're new, if you want to be a new member, you can use that and do that there. All right. Mark says late lunch today. Oh man. ARM, what's up, man? Good to see you here. Diego's here as well. Wazobia Dollars, what's up, man? Can you pay with Bitcoin or USDT? You can pay with Bitcoin. You can pay with Bitcoin. When you go there, just at the bottom where it says choose your method of payment, just check the cryptocurrency one. We use Coinbase Commerce as our what do you call it? Crypto payment processor. So they don't do USDT, unfortunately, but they do Bitcoin, so you can pay in that. Keith, what's up, man? Good to see you. So here's what's going on, guys. Here's Bitcoin, and we've got some levels kind of, charted out on here. We've still got this yearly open up here at around 46,211. We take that out. I think we're good to go. Pretty good. Before we do anything else, let me show you something here, guys. So we had the bottom here, and what we're basically getting is this higher lows up toward this resistance here. You see how we're getting like this here? So it looks to me like we're just kind of consolidating before we get a breakout, which would make sense because this yearly open is a significant level. And so breaking out, we should see a strong rally up through that to break out. So I think all that looks fine and whatnot on there. On the 4-hour RSI, we've got hidden bullish divergence right here. Right there at the R1 pivot where it's trying to get going right here now. There's a couple of different counts I have. It really doesn't matter which one it is. I've got 3 and then a 4 as an ABC here. I've got potentially a 1, 2, and instead of 3, it's 1 of 3 here. And so then it's a flat correction. So A, B, and then basically 1, 2, 3, 4, 5 here for C. Doesn't really matter which one it is at the moment. In either case, you want to get a breakout above 44,096 and a half. Once you do that, you should be good to go higher. Locally, we may have a bit of a wedge, a descending wedge printing here. So if we can get an impulsive breakout above that wedge resistance, that gives us a pattern target based on the height of this wedge here of $2,201 and a half above the point of breakout. So those are kind of the easy targets right there to kind of get onto. As you can see, we've dipped down and oversold here and oversold here as well with RSI and Stochh RSI on the 1 hour. We are crossing bullishly and attempting to break out a Stochh RSI right now. So we are just below the daily pivot here. So I would really like to see this kind of get up and back up above this, immediately above this resistance right here. You see how you've got this block over here, and it worked as support and resistance right in the same area. I'd like to see a nice impulsive breakout above that. If we can get that, I think that holds this support, and then we'll just continue to look up through, the target, wave B, swing high here. Heading up here, first target is this range of 47,444 through 47,902, but I think we'll continue through that, and if we do, we'll head on up here toward, oh wait, it won't be quite that high. Let me see here. Because this wave 5 would be for this wave 3, 4, and 5 target. But if this 1, 2 is a flat is printing here, if that's the correct count, then that'll give us that secondary target of that wave 3 up there at around 53,460. So you don't have to know which one it is. All you have to know is if we break out and head up through those levels, then we're heading up, and first target right there in that range, and then second target up here at the minimum expected wave 3 up there. And so like I said, if we are breaking out through this and heading up to this wave 3 area up here, then I'm going to assume that this is, from this area here, it's a 1, 2, and then 1, 2, 3, you'll get 4, you'll get a 5, and then you'll have a 1, 2, 3 up here, 4 and 5. So I'm really, with the depth of the pullback here, I'm really kind of leaning toward that potentially being what it is. But we'll see. I'll just leave the rest of it on here just in case, right? Let me see here. HJ, what's up, man? Good to see you, buddy. So, yeah, that's kind of where we're at with this, guys. Now, if we jump on over here to the triangle, remember, this is that other alternate count that says maybe wave 4 is still in progress and printing a triangle. I know Hank really likes this one. Though he believes, I think, that if it's a triangle, it's going to extend into the end of the year. I think if this count is correct, we're going to be up to a new all-time high, probably, what is this, beginning of March here? Probably this summer. We'll be up a new all-time high this summer, if this is correct here. We've got this really kind of extended wave A, B, and you can see how wave C gets shorter here. Wave D would get shorter. Wave E would get even shorter, and then we'd be up and out. So I think we'd probably be like that. But, it doesn't matter to me whether it is this summer or whether it is the end of the year. As a matter of fact, end of the year is probably better because, taxes, right? Here in the U.S., you have to hold things a certain amount of time to get those short-term capital gains versus long-term capital gains tax, right? And so I'd much rather have the longer-term capital gains tax, which means every new position you buy has to be a year, you have to hold for a year. So if you guys remember, I am long still. I don't even remember what it was. Whatever I told you last time I showed you. I posted it there on Twitter here. Let me see. Long from... let's see. Okay, there it is. I'll bring it over here for you guys. Yeah, so back from the 23rd of February, long from 34,997 here. Not 34,997.41. So I'm still long from that as we're sitting here now. Let me see here. What are they? Oh, a couple of stuff here I can tell you about real quick that I almost forgot about. Let me see. If we get up here, this is a pretty good little thing you might want to read here. You can follow me here at Texas West at TX West Capital on Twitter, and this Glassnode newsletter they did here, where they started talking about the on-chain metrics and how it basically supports the idea that the all-time high buyers, the buyers around 69,000, 68,000 up in that area, have been capitulating and their supply is being sucked up by them long-term holders. And so there's a good article on that in there. They give you all the on-chain data for you guys if you're interested in that. Elliott Wave International has 2 events right now, guys. They've got this one right here. Oh, geez, can't get on there. There we go. They got right there, which is the war. Let me see here. Oh, that's the 5 free insights to prepare investors. And then they've got this War and Markets Free Pass, which has to do with Europe there. And you can sign up for either one, and it'll give you access to the other as well. But you guys know I really, I like a lot of what EWI does, so they give me these links to give you guys when they have their free pass stuff. And then you can kind of get in there and get the information for free. I try to do that. Like, again, Glassnode, this was free right here. This is free right here. Here's the other kind of stuff they got with it here, the article, the images they give me to put with it. But, I try and give you guys the real kind of, not the fluff and nonsense and your fly-by-night, some guy that just learned to trade yesterday kind of information. I give you the access when we can to this, better information, more professional information, right? By the way, speaking of that, right here, you can use this right here. You can sign up to their newsletter. This is for Lycian. If you haven't checked into their newsletter, guys, you should do that. Absolutely amazing. They've got a whole bunch of different newsletters that you can subscribe to that are free right now. They probably won't be free forever, but you can get in there. As a matter of fact, I know they won't be free forever, but you can get in there and get some free stuff while you can. It's really great information, guys. If you really want to understand how things work, Lycian is one of the better ones I found out there. So they have this, you'll get access to everything they publish prior. If you subscribe to their newsletter, you can go through their site and do that. And you'll also get newsletters coming up, right? And so they actually released their 2022 US dollar. They had an analysis and expectations section on it. It was titled The US Dollar in 2022, Cautiously Bullish. I think it's worth a read. It reiterates a lot of the stuff that I've said over the last year. And it's got some other points as well. I don't necessarily maybe agree with everything it says, but with a great bit of it, I really do. And so, here's one part of it here. Talking about, beginning of last year. Same thing I talked about back then, guys. I was talking about how these longs were close to an all-time high. You guys might remember me saying that. And I said every time historically that happens, the dollar reverses. And so, they were at that huge level of bearishness, like 90-somewhat% or something like that. And that we expected, of course, the dollar to rally, right? And so it did last year. And then, of course, they're going to go on to talk about 2022 and their expectations for that from there. So I would definitely suggest, man, the weekend's coming up, guys. You got some reading that you can do there. I definitely would take a look at all that, all right? All of that information, by the way, is free, guys, in case you weren't aware. All of that stuff is free. Let me see here. What else do we got to talk about? Non-farm payroll, right? Let's talk about that. So non-farm payroll, we had 678,000 jobs added. Okay? 678,000 jobs added. I think they were looking at 430 something, 438,000. So surprise to the upside of over 200 and almost 240,000 more, right? So almost like a 50% surprise to the upside. So that's huge. Of course, that kind of got into the dollar here, sent it rallying up higher here. Went even beyond my target where it was for this wave 5. But I think at this point now, I think we may have wave 1 done here. So basically 1, 2, and then 1, 2, and then 1. And I would expect wave 2 to pull back a minimum of 38.2 to that 97.995. Secondary target of this 50% level here at around 97.712. And then we'd be looking for, depending on where it pulled back to exactly, just a quick pull here, potentially up here at 101.82 for wave 3. 1, 2, 3, which as you can see will give us a 5 right up here at this supply structure EQ area. If it heads down to the 50%, it gets you down a little bit lower there, but it could overextend and head up there. But nonetheless, heading up to that 103 level, which would then just be wave 3 up here of potentially 1, 2, 3 of the larger 5, still ongoing, still breaking out, still heading higher. So the only thing that changes anything on that, guys, is if we drop on down. Right now, if we drop on down below wave circle 2 here at 96.523, if we break down below that, then we have to go and reevaluate what we've got going on here because that invalidates this 1, 2, 3 heading up, all right? So, again, dollar continues to rally. Nothing surprising here. Same thing we talked about for the last year, guys, and we talked about prior to that happening. Took a little bit longer to get there than initially thought, but again, if what we're looking at now in terms of the economy is this the tops in for the stock market and whatnot, the expectation is that the dollar is just going to continue rallying, right? And so this is that same theme that I've had here for a few years now, guys, and it may be playing out. We'll take a look at stocks here in just a bit. Let me see here. Excuse me. Claudia says on the 1 hour, if we dip $200 below the recent low, we enter into wave 1. Unfortunately, looks more like an ABC correction, this whole move up, in his opinion, from 34,000. Let me see what you're talking about here. From 34,000. Oh, you think this looks like an ABC up here? It's possible. It's possible. But again, the idea is if this is 3-4, then we really kind of need to rally from where we're at. If it continues lower here, we still look at this as a 1, 2, and then a 1 with a flat as a 2, right? And in that case, 61.8 right here, we would look, if we're going to drop down below this swing low here, I'd look down toward this high volume node closer to this 70.5 area, which is 39,225.5. That high volume node starts there around 39,400. That's probably where I'd look. But even the 78.6 just pulls back right here to this previous support resistance area, and would still be a solid wave too. So, there's a lot of potential for this to continue, its rally from there after it finds some support there and heads up. But again, we'll see what happens until it breaks out. It's still going to potentially fall lower there. And it very well could be. If we drop down below this swing low here at $37,020, well, that'll make this look a lot more like a ABC up. I don't know. If that ends up being an ABC up, I mean, maybe this is still wave 2 printing over here and just printing a flat correction. ABC down, ABC up, 5 back down, back up. Again, it'll cause a lot of pain for traders. I warn you guys against trading, depending on your time frame, the corrections. If you're trading these shorter time frames, well, then you've got definitive, you've got a bullish trend there, you got a bearish trend there, you got a bullish trend there, you got a bearish trend here. You could trade in the direction of the trend. If you're out to the daily or something, this is just kind of sideways correction here. When you get out to the, to the 6 hour of the daily or something like that, I mean, this is just sideways. And so, if you're doing the daily, at this point here, you shouldn't be trading this between the swing high and the swing low here. You should be waiting for either a breakout or a breakdown. But that's because you're on that daily time frame, So that's, you got to have more patience on the daily, right? But really, this is, you got swing high up here, you got swing low down here. So if you're trading daily, you look to potentially short on a breakdown there, or you look to long on a breakout up here. Other than that, anything going on here, you probably shouldn't be trading for the daily or larger time frame there. 83 Mad, what's up, man? Let me see. So yeah, so that's kind of where we're at there right now, trying to find support around the 1 hour. The daily pivot, which as you can see is right here, is this previous area of support or resistance all the way back here. Look at this: resistance, support, support, resistance, resistance, support. So this is a pretty significant area here. So if we can get a rally up off here, just using pivots to pull back to the pivot and then rally up and break out above the swing high, usually will indicate that you're running the pivots. So that's alone. But then when we look at, okay, over this, since January of 21, so just over a year long here, this is a pretty significant area. So a rally, again, a reversal and rally off this area to head up would be pretty significant. So, yeah, a lot going on here. We just play it, day by day, guys. There's no use in, thinking you're going to buy or sell right here, looking to get up here or down here. That's silly. Because, again, even on the daily here, you are right now range bound between this swing high at 45,855 and this swing low down here at 34,322. So, again, on these larger time frames, you should be waiting for that breakout or that breakdown before you decide to do anything, if you're trading just the larger time frame. Again, if you are in these lower time frames, well, you do have your trends that you trade in, right? So you trade as this trend developed here, heading up, you would just buy the dips. This is heading down, so you're just going to sell the rejections, right? Because the trend is down until it breaks that trend. And so however you want to define how that trend is, whether it's using moving averages or market structure or whatever, the idea is that you just trade in the direction of the trend until that trend changes with that way, okay? So, let me see here. But yeah, otherwise, we're also just on the R1 of the 1 hour pivot. So, to get a move off here, it's setting up like it wants to. You see it right here. Again, same thing we talked about over here with the volume. Can I get back there? We're getting that same thing here, where you've got your large volume on this right here with the wick, almost a doji with this long lower wick. Less volume, but more candle spread here, so less effort, more result on the next candle. And then you get the third one down, and it's almost the same effort as the previous one, but it's completely flipped. Now demand's in control. And so, almost the same amount of effort, no result at all, negative result for that effort. And then, of course, we have our current one here, which is trying to rally up, get that volume. So, this kind of screams at least bounce, similar to what we had here, if not, reversal. And the first step of that reversal really is going to be this level right here, guys. Again, it's this support resistance right here. So breaking out above this swing high at 41,909 and 42 cents, I think is going to be a good clue that wave 2 is potentially complete there. But of course you have, your pattern here, your pattern target. You've got all this other stuff on the way here. By the way, if you check the volume here on this drop, you can see how this is down here. So breaking out above this level right here would be pretty significant. If you want to break out of this right here, this purple line, where you have this high volume node, on this move down, this level right here around this 41,376 is where most of the transactions took place, where most of the volume took place at price levels. Secondary one is right up here in this high volume node around this 42,440 kind of area. So, if you're just doing volume analysis, then what I would be looking for is a breakout above this, this 41,375 kind of area, and having a target of this high volume node up here at around 42,450 or so. And if you can get a breakout of that, well, then we're looking at the next one up here into this, probably this area right here, about 43,858, as far as, where your volume has really come in on that drop down. So, yeah, you can kind of look at that, decide how you want, however you want to play it. But you've got your different levels depending on how you're looking at it, where, structure-wise it's here, volume-wise on the drop it's right here, and then, up there. So you've got your things that you can look at in terms of, again, pivots. You've got a support pivot here. You want to get above this one up here, which is pretty close to that other higher volume node there as well in the drop. So a lot of different ways to look at it, guys. But you know that you've got those levels you have to get through. Until then, price can continue to fall further, and we'll just look for that lower target there. Let me see here. So there's that. Let's see. So that gives us the Bitcoin, the dollar. Let me see here. Oil. So oil, again, range bound right here. Oil, I was looking for it to rally up further when you had your 3 and your 4 here. I was looking at it to get up here maybe around 122 or 125. It came off pretty low or pretty quick and hard here. But here's the thing. It's only in 3 waves. So it's possible this could just be 1, 2 of 5. Okay? Right now it's 5 waves up that broke out above wave 3. So 5 could be done. But we need to break down below wave 4 in 5 waves, right? So that's coming 5 waves down below wave 4. Instead, what we have is just 3 waves down right now. So if we get this breakout above this swing high at 114.97, that's going to indicate this is probably just wave 1 and 2 of 5. And so if that's 1 and 2 of 5, well, then we look like this. We go, okay, well, there's wave 1. Here's wave 2. And we're going to say, okay, well, we've got minimum wave 3 up here around 125, minimum wave 5 up here around 129, 130. Okay? But again, like I was talking about with the larger time frame Bitcoin, you want to wait till it gets out of that range. Okay? So right now this range is 106.43 to 114.97. If we break down below 106.43 and we don't go above this level, then we have a 1, 2, 3, 4, 5, right? And that would suggest, and likely that should drop it below 4 here, but that would suggest that wave 5 is done, right? But again, if we do break out above here, then we've only got 3 down, and so then we start looking at 125 and then 130 to finish maybe off wave 5 of 5 of 5 up there, like that. So right now we're just waiting to see what happens with all this. Let me see here. The 4 hour here is suggesting that maybe it might continue up higher there, but it could just kind of goof off down here, remain low. Our daily is high though. So the one thing about getting up here is it gets us closer to that R5. And since we've already run up through our pivots here, remember what I told you guys, when you come in sideways between the pivot and the R1, if price just rallies up through that R1 to the R2 or R3 before it pulls back, rather than hitting the R1 and pulling back the pivot and then going, this is bullish here. And usually this indicates a rally up to the R4 or R5. So, that higher target up there, 125, 130, gets us up here to that R4, R5. The 130 gets us right up there at the R5. So I think that probably that's where oil's headed. But here's the thing, guys. Remember, oil's been rallying since May of 2020, right? Look at this. It's been rallying since, I can't even get it over here to get way down here. Way down here. There was that drop in May of 2022 with the whole pandemic thing, right? And so it's been rallying since then, guys. This is, how long is this? In the weekly, this is right there, around 679 days that it's been rallying without any large pullback, guys. Right? That's quite a bit. So, if you're looking at this in that term there, 600, is it 679 days, is it? It'd be what, 360 days through May of last year. And then this is another 7, 8, 9 months. Huh, I guess so. Yeah, I guess it's pretty close to that. Anyway, that's a long bit of time to be rallying without a pullback. Even the monthly here is overbought. We're heading to overbought here. So we are coming to in spite of everybody calling for $200 oil and whatnot, I think we're coming up to it. I think this count's got us there probably around 130. And by the way, also notice this, that here in this last bit here, you notice how it's kind of gone sideways like this, but here it's very vertical. That's usually indication of coming to an end of a trend, of a very, of a hard, long trend there. So we've kind of just gone sideways as it's gone up, but here it's just very vertical. Even here was a lot more vertical than what it usually is, right? So that would be something else you'd be looking for that says, hey, we're probably heading up there. That we're probably going to get up to the area and come on down. So if you're looking to short oil, I'd probably look up, as long as we break out above that local resistance there, of that local range, I'd probably be looking up closer to that 130 area. Unless we just get some overlapping here to finish wave 5 as like an ending diagonal or something. Wave 5 of 5 of 5 of 5. But yeah, I'd be looking to get ready to short for a really good, because once it gets down, guys, it's probably it should drop, downwards to around $60, maybe even more once it does. Okay. By the way, oil is kind of your canary in the coal mine when it comes to your economy. Usually if oil is reversing, if it's been rallying and then it reverses and, it's made a top and it heads down, usually that's an indication that your economy is also doing the same thing. Okay. Because again, oil's so ingrained within the economy, right? I mean, it's not just fuel, but it's also plastics and everything else, that oil does. So yeah. It would make sense that if that price comes off, the demand's coming off for oil, which means the demand for these products is dropping, which means your economy's probably not doing so well if the demand's falling off, right? So that's kind of how we look at it there. But yeah, looking looking like it may head up a little bit further there. Just got to finish this out. And so then this would be a 1, 2, 3, 4, 5, a 5, a 5, a 5 heading up there. All right. Let me see here. Silver, it's made it just a tiny bit higher here. So it looks like it's getting long in the tooth. It looks like it's pretty worn out. I've got this potentially as a 1, 2, 3, 4, finishing a 5 here. Somewhere in this area up to maybe this daily R1 pivot at $26.03. But again, for me, that says that this is just wave 2 of this, possibly just wave 2 of this flat correction, right? So wave 2 of A, B, C. So, and then that's the high volume node right there. It's what we're looking at. Notice we're really far off from the swing high up here. We're 20% off that or so. So still a lot of ways to go up if it still did. For right now, looking at this as an ending diagonal of a wave 2 flat here. Ending diagonal for wave C. Just finishing that up. Now, the important thing here is we've got this breakout here, right? Well, locally here, this breakout, right? Gold, it's kind of came up here, but it hasn't broken out yet. So there's a non-confirmation between gold and silver right now. We've talked about non-confirmations in the form of stocks indexes. Like maybe you have the Nasdaq continuing higher, making higher highs, and the Dow's making higher lower highs. And so you've got that non-confirmation there, something like that. Same idea with gold and silver. So if gold is topped out here, whereas silver, has made that higher high here, gold is not. And so if we get a reversal on gold here that heads on down, well, that non-confirmation would signal that silver is likely topped out or just about there. Again, the whole idea that it would be done according to that count I've got there, because gold is not confirming that rally. Now, as far as gold goes right here, we've rallied pretty hard, above 90%, so it could still break out higher here. But in terms of it, there we go. We're still well off of the, what was this, $20,089 or $2,089? $20,000. So we're still a good bit way off there. We're only right here. We've only rallied to just below the 78.6. So, I mean, we've talked about the possibility that maybe this is like a wave 4 triangle. We've got wave 5 heading up. That's still possible. But I'm not really going to worry about that until we're getting closer toward the top up here. But right now, as it sits here, if we get this pullback here and it drops down below this daily pivot at 1889, that kind of area there, then that'll be your first real clue that maybe wave 2 is complete here. But what you're still going to want to see is the breakdown below wave B all the way down here at 1677.90. That will confirm that that this is wave 1, 2, and we're done headed down. But along the way, you want to see the breakdown below the daily pivot, then below wave 4 here at 1753, and then wave B over here at 1677.90. And then those are the steps that you have that you have to follow through to signal that top may be in, guys. Like I said, until you're getting down and doing all that, could still head higher. If you break out through the top here, then like I said, it's possible that this is wave 3. This is a wave 4 triangle in this area. And then this is wave 5 heading up. Which, means it'll just go up there a little bit above, a bit further above that all-time high. And then you'll have a nice big pullback, back on down here 1700 or something, potentially. So that's kind of where we're at with that as we watch that continue to play out there, guys. So we'll see what happens. Let's see. Right now, locally, we're getting possible tweezer tops up here. But you want to see this definitely come on back down here and get through these swing lows here as it continues down there. TLT rocketed up here today. Big gap up here. I didn't like the depth of pullback here, but it's still possible. We've got a 1, 2, 3, 4, 5. 5 would at least have to get to 142.57 because this is a leading diagonal in the form of a ascending broadening wedge, which means wave 1 should be your shortest, wave 3 should be the middle, and wave 5 should be the longest. So again, wave 5 would have to get above 142.57 to be longer than wave 3. But, again, nice pullback here. Could be a 1, 2, 3, 4, maybe get a 5 on that breakout. Then you get your 1, 2, 3 heading up. So for now, TLT continues to look up. Remember, TLT are your long-term government securities. That's where your safe money is, right? Palladium is pulling back right now. So you probably want to wait for that to pull back a bit further. I think the last time I looked, I think we were looking at a wave 2 on that. Maybe not. It may be. I have to look at it again. Maybe. Oh no, I'm thinking of platinum. Let me look at my chart here real quick. I think platinum's the one that's in wave 2 pullback right now. Yeah, it's just finishing up potentially wave B of 2, or 2 could be done. So yeah, we'll see what happens with there. But Palladium, yeah, if you're into metals. Oh, let's see here. Palladium. Where's my Palladium chart? Oh, man, I hate it when we can't find these things, right? Oh. Yeah, I mean, I think it's just about topped out. I could see maybe like another maybe 10% rally on it, maybe. Right? No, it isn't what? Palladium is the place to be? No, it isn't, but I did not say platinum. I'm not sure what you're saying there, Hank. I'm not sure if you're talking to yourself or correcting yourself or what. But yeah, no, Palladium, I think we've got maybe like another 10% to the upside, if that. And then I think you've got a nice big pullback after that coming. So, yeah. Let me see here. Yeah. If lithium is the place to be if you're looking if you think that EV electric vehicles are going to continue to just dominate, or just going to start getting more and more dominant, lithium's the place to be because you need lithium for those batteries. So yeah. Yes, I was confused in the two. I was confused at first when I said it. Yes, and that's why I corrected myself. Yes, about palladium and platinum. Let me see here. All right, so that gets us that there. So when we look at TLT, again, we always look at that TLT junk, right? And so again, the idea that when the TLT junk ticker is going down, that's risk on. And when it's going up, that's risk off. Remember, this was that December leading into March here. And then, of course, this was that March, that low there in March, that crash. And so in this, it was leading up, so this becomes more and more risk off, right? And then it's risk on after that crash. Everything kind of corrected and went up new highs, right? But here we are now again rallying back up here. It looks like wave circle 2 is done here. And so we're getting a good candle at the moment here on the weekly. We definitely want to see it break out above this resistance right here at the weekly and kind of continue up. That would give us a wave circle 3 target up here about 1.63, which is just above that pattern target. And so again, this rallying up here tells us that people are getting out of junk bonds, which is corporate bonds, and then they're going into long-range or long-term government securities, which is considered the safe bet. And so people go into those long-term government securities and they get out of corporate debt when they're scared, when they're worried about what's going on, when they're worried about the market. And so that's what we're seeing right now, with this chart. Though really, we're just kind of sideways here from June of last year, really. But we'll see if we get this breakout and head up higher there. If it does, there's not a lot of reason to believe that that the stock market's going to continue, making new highs with that. Okay? So, that's kind of where we are with that, guys. Oh, let me see here. What is this? Oh, okay, yeah, this is the jobs report. Like I said, we added 678,000 jobs in February. Jobless rate fell from 3.9 to 3.8%. So now that's the good news of it as far as what's going on with the economy and whatnot. Job growth, I think, was over the last 2 months was ratcheted up 92.8 thousand or something. Almost 100,000 jobs were added when they went back and redid the numbers. Average hourly earnings rose a penny from a month earlier. Hourly pay has risen 5.1% over 12 months. This is what you're interested in when you're looking at what's the Fed doing. That 5.1% is that wage growth, right? That wage inflation there. And so as that continues to rise, what it means is people have more money to spend, right? And so if the Fed is looking for a reason to raise those interest rates and to, continue to remove that support, this is the thing you want to see for that to happen. And so you want to see the jobless rate falling. You want to see the wage rate growing. Let me see here. You had a slight increase here. The labor force participation rate. So all these things, I guess they all but guarantee, guys, that we're going to see at least a quarter point hike in March. I believe we've got. I think the market is penciling in 6 rate hikes, 6 quarter point hikes this year. I think is what the market's looking at right now. If any time along that time that everything just continues to get hotter like this, don't put off the idea that a 50-point basis hike in one sitting won't happen. You got Bullard and a few others who are getting pretty vocal about that. So if we see it, if it's, let's say they do a quarter point here in March, next time they meet, if it's still showing that it's rising, they might, within the next 1 or 2, set it up to a 50% basis point. Again, remember, that hasn't happened since 2000, right before the dot-com bubble burst. So, ever since then, it's been only quarter point hikes when it's risen. So quarter point is lockstep with what they normally do. 50 basis points will be like, wow. It'll be a kick in the pants. It'll get people's attention. So that's where we are kind of sitting with that. Let's jump over here and look at the stock market right now, guys. Let's see here. What do we got here? All right. So we've got the Nasdaq here. Couple possibilities with this. I'm not real keen on this very short wave C here. Potentially 5 up for A and then 3 down for B. And then maybe, 1, 2, 3, 4, 5 for C. It's a pretty short one, though. For right now, we've only got 3 on the pullback, so it's possible, I think. It's possible that maybe this is still wave 4 over here, playing it as a flat. So you get A, B, and then 1, 2, maybe a 3, 4, 5 here. And then this is C. So this would be A, and then A, B, C would be B. And then rallying back up here would be C, with a minimum target of the 50% retracement at 14,148. Secondary target up here at about 61.8 at 14,543.54. Let me see here. But that'll keep it below, yeah, because that wave 1 is way up here. So even if we hit that 61.8, wave 4 will still not impede on wave 1 up here. So it would still be all right to do. So what am I looking for now? Well, right now it looks like we've got a pretty clear 3 waves down. So I think if we're getting a breakout above this swing high right here at 13,697.81, that'll suggest, I think, that wave A ended here. This is wave B. And then we've got at least that initial target of 14,148 for wave C. So that's what I would be looking for there. Otherwise, we continue to go down in 5 waves here, and then we look for a breakdown below 12,950.73, adding more confidence to the count, whatever. And we're heading down here to a wave 5, expected target of 11,864.5, basically. S&P E-minis. Not a whole lot different here. There's a slight dip here. It's possible maybe we've got a leading diagonal going here. So 1, 2, 3, 4, 5. So maybe, you got ABCs here. And so I think that maybe what's going on here, we do have, let me see here. We do have bullish divergence here. So what we're going to look for is a 3-wave advance that stays below the swing high up here. If you break out above 44.18 and 75 cents, then it invalidates the count. But if you're just getting 3 waves up here and then you break back down below here, I think then you're headed lower there. So for me, I'm going to set this up right here. I think we've probably got wave 1 done as maybe a leading diagonal here. So I'm going to set these up here real quick. What is this? 44.1875. Swing low down here, potentially 42.8125, which gives us the 50%, the 61.8, right around this previous wave 4 area, so right around this area. So that's where I would look for wave 2 to potentially get to on that there. Kind of set this up here so we know what we're looking at, since I use this for my members there in Discord. Yeah, see, descending, broadening wedge type thing. Whoops. There we go. And so if we get up toward that area, that would generally give us a wave 3. If we can reverse from that area. Let's see, we'll say right about there. That would give us a wave 3 down here at about 44.75. So we'll have to see if we can make it up there in 3 waves and then reverse and head on back, and then we'd be looking down toward that area for that wave 3 target. Let me see here. Let me see. So this is that. So now we've looked at Nasdaq. We've looked at the E-minis. And let's go ahead and take a look here real quick at the Dow. The other of the big 3 here. There we go. So here's the Dow. Again, potentially done here. Again, well, it's a better wave, C than what we had on the first one, but we're only down in 3 right now. So if we break out above the swing high here at 34.059.73, that'll suggest that wave 2 is still in motion. And we have an initial target at the 61.8. at 34,423.60. Secondary target 70.5 at 737.72. If we continue to break down, though, 1, 2, 3, 4, 5 below wave B here, then we're looking at wave 3 down here about 28,387. So again, same kind of thing with the other ones. We're kind of trying to get some confirmation of movement in one way or the other. Okay? So yeah. Let me see here. I think that just about does it with all my charts I've got there, guys. Let me see here. Yeah, I think it's about what I've got there with my charts there. So I mean, that's kind of where we're looking at. Again, nothing should be surprising in any of this. If you're surprised that the dollar has continued to rally over the last year or so, I don't think you've really been paying attention then, or you've been listening to a bunch of the silly narratives given, loudly. I've given you my reasons why since, the beginning of last year, why I believe that we were reversing and heading up with the dollar. Here we are almost at 100. I mean, in the grand scheme of things, guys, you can look here and, you look at all these different kind of things, right? So you have this downward resistance that we broke out of here. You have this upward support here that a lot of people like to draw off these two right here, which I didn't like because remember I was talking about the fact that, you're going off support, and then resistance rather than alternating back and forth, which is what you like to see with a significant pattern. But in this right here, you can see that we've rallied up through it quite significantly. But overall, guys, here's the thing. This is sideways still. Let's go off here. This is still sideways. Okay? So we're still sideways since 15 here. I think that was right around the time that we had that bit of deflation that kicked in for just a tiny bit back then, 2015, 16. So that's kind of this area in here. We are, well above mid-range here, though, which is significant. If you look here at this resistance support level right here, you can see we broke out above it, came back, retested support, we rallied back up off it. So that's, that's a bullish event right there. It's right in this area. So we are on the top side of the range, but we're still range bound, guys. Now, as far as the weekly goes, I mean, here we are just now rallying off, breaking out of oversold here, crossing bullish and rallying up now. Again, if we're looking at pivots here, I'm going to tell you the same thing that we've already talked about earlier and that I usually talk about, which is coming in sideways between the pivot and the R1. If you rally impulsively up toward the R2 and or R3, that's about as bullish as you can get, and you can usually expect price to rally on up toward the R5. That's what we're talking about with oil, right? So, again, watch what happens in this area. Now, we can still hit this R1 and then pull back to the pivot and then break out higher and still be okay. But if you want to talk about just how bullish maybe it is, if it is, again, you want to see this continue to rally up strongly and nicely through this area. You can see that right here, we're coming into this sideways, this kind of resistance, the ceiling here, which sits right on top of this previous resistance. So we'd have to get out above that. But if you're popping out above that, you've got a lot of, you have just a couple of levels there, really. But it's really just free air moving on up. Breaking out above 103.82 really kind of opens you up there. Now, if we look previously, once you get through that, you do have this area up here around 106.5 to 108 or so that you'd probably find resistance at. But again, you hit that, you pull back, and then you break out above that, and all of a sudden you're open up here toward 115, 120, which is what we saw back here in July of 01 and then over here in January of 02. So, a lot of that there. Again, you've got this descending resistance here. I don't know if I've got on this chart. Yeah, there we go. So you've got this descending kind of support, resistance, support. So if you're getting up above that 105 area, maybe 106 area, depending on how quick it does it, I mean, that gets you up and out of this downward trend that we've been in since back here in 85. That's significant. So yeah. So, again, just kind of continue to watch it there as it's playing out. But, we'll see what happens. So far, the narrative continues to follow that the dollar's dominant. People say, the dollar's rallying because of war. The dollar's rallying because of inflation. The dollar, blah, blah, this and that. But, again, guys, this is what we talked about prior to it reversing there last year in 2021, right? I keep telling you guys, the information's in the charts. Stop trying to react off news events. You should be ahead of those news events. Now, does that mean I always get it right? No. Come on, guys. We're smarter than that, right? You're not going to get it right 100% of the time. Most of the time, you won't even get it right 50% of the time. But that doesn't matter because risk management keeps you safe. And when you're right, you're really right. And when you're wrong, it's nothing. But most new traders they refuse to wrap their head around that. And so they keep putting themselves in bad situations with trading that they don't need to do. Stop doing that to yourself. Proper risk management. Make sure you're doing that. Okay? That's the key. That's the key of being a successful trader. It's not like the Yahoo show you on there where they're making, when somebody makes this one trade that does really well and they sell it near the top or buy it near the bottom. I do that on enough times. I've shown you guys. I do that enough times, right? But that isn't what makes you a great trader. What makes you a great trader is consistently locking in profits, using proper risk management so one move doesn't just about wipe you out. That's what makes you a good trader. The rest of the stuff, you'll get lucky every once in a while, even as a new trader, and sell near the top and buy near the bottom. As you become a more experienced trader, you'll be able to do it a bit more often. But that itself isn't what makes you a good trader, period, guys. Okay? Yeah, Hank says, very true. People get married to losing positions sometimes. Know when to cut it. It really is, guys. It's a hard thing to kind of get yourself to recognize and to do. But once you do, man, your account, it works so much better. Trading becomes so much more fun. It's a little loss. Who cares? It's fine. It kept you from losing big. If you guys actually keep a trading journal, which you should, especially if you're not a consistent trader, even if you are, you should. But especially if you're not, you keep it. And I'll bet you that you will consistently find yourself holding on to positions that you shouldn't hold on to. They could have just been a small loss, say like a $100 loss, and you held it till it was a $2,000 loss. I know I'm reaching you guys right now. I know you're sitting there going, oh, yeah, that's me. I know, I was there. Guys. I know. But if you want to be successful in trading, guys, stop listening to the idiots out there on social media. Stop worrying about one trade. The goal is to develop a system that you can apply over and over again that accumulatively brings you in more money than you lose. That's what you should be doing. If you are still trading every trade as the single trade, and you're not doing it as part of a system, the same system over and over, you're just looking at every trade brand new, you're doing it wrong. You're going to lose money. Okay? USD CAD's been kind of crazy with the sideways. We had a great breakout of that descending resistance today. So I think the count that I've got there is working at the moment. Let me see here. Yeah, so I've got this count here, which says 1, 2, working on 3. It looks like we're dropping back a bit more for 4 here. We're in the 50% level. So we'll see if we can get this reversal back up. 5 should be getting up here, at least around that R1 pivot, the current R1 1 hour, 4 hour pivot, which is right around the pattern target area there. So yeah, looking for a breakout and reversal back up. Getting above these swing highs in here on that move. But we could see this count is really kind of quirky right here. So I'm not for sure this is the the correct count here. It could be that we've got maybe like ABC is a 1, 2, ABC is a 3, 4, ABC is a 5 here. So we could have 5 and then back. And so in that case, we'd be looking for this pull a bit further back. You got the 50% right here at about 1.26894, which gets you right into this hourly wick right here, this demand, which retested this resistance as support. 61.8 will get you a bit further down into this larger wick over here at 1.26653. So yeah, I mean, I've got this as a 1, 2, 3, 4, 5 right now, but I think it's still possible. Maybe this could be an ABC is 1, 2, ABC is 3, 4, ABC is 5 maybe coming back. Yeah, but this whole sideways has just been a real cluster. This whole kind of thing here. But I mean, overall, I mean, look at USD CAD. We talked about the bottom back over here. So we were in pretty close to that bottom area down there. We'd identified that range, and the price action volume suggested it was accumulation happening. And sure enough, you got this nice big rally up and out of there. And so it's just kind of, higher lows toward these slightly higher highs. Looks like we're kind of building almost a barrier triangle here, an ascending triangle. Got resistance right here. You've got the lows coming up toward it. And if it is something like that happening, that's going to give us a 1, 2, 1, 2. A 1, 2, 1, 2. And we should expect a nice strong breakout for 3 of 3 or 3 of 3 of 3. Should take us out up and through there really well. And this would make sense. If the dollar's going to continue to rally, oil's going to find a top. That's as bullish as you can get for the USD CAD pair. Because the oil finding a top and pulling back takes away the support for the loonie, the Canadian dollar, right? So that's not going to be very strong. It's going to be losing value. And then the USD on top of that is gaining value, right? So you have the USD gaining value, the loonie losing value in the same chart. That should give us a nice strong wave 3 of 3 up. I'm going to actually be looking to trade that one to get that up there, because I think it'll be a nice extensive kind of move up with that. By the way, if the count here is 1, 2, 1, 2, wave 3 has this target up here at about 1.35227. So nice area up there. Nice target, long-term kind of target thing going on. But we need to see follow through. We need to see those things happen, guys. But yeah. Let me see here. Let's see. If you're in Discord with us, look in the resources and self-development channel, and there are some links in there to journals that some of the members use. Y'all keep telling me I need to put one together and put it out there, and I may just put my logo on it. But I may end up getting around to doing that and putting it out there for you guys to purchase if that's something that you wanted to do. But regardless, I think again, guys, I think especially if you're an inconsistent or an inconsistent trader, I think that it behooves you to really kind of get a trading journal and keep it meticulously. I really do, because how else are you going to learn what you're doing wrong? What mistakes you're making along the way. Often in the heat of the moment, you're emotional and you don't recognize that you're making a mistake. It's only until you look at it later, after those emotions have left, that you look and you go, man, what the heck I was doing? That was one of the turning points for me as a trader, was using a trading journal. God, I guess that was 23 years ago. It was the last few years right before 2000. All that Y2K stuff was happening. We were all listening to Prince 1999, right? Party like it's 1999. Anyway, if you guys don't know what I'm talking about, man, get yourself turned on to some Prince, man. He's gone now, but man, oh man, that was some great music. Do I still use one? On occasion, yeah, on occasion. Especially if I find myself where I'm making mistakes more consistently than what I'm used to. Yeah, I will. I don't use it religiously anymore. Again, I've been doing this for, since 95. So what is that, 27 years almost. About the summer of this year, I guess it'll be 27 years. So I don't use it a whole lot anymore. But when I was first starting, I was screwing up. I was doing all the mistakes at the beginning, first few years. I've told you guys this before. And I finally sat down one day and said, I can't keep doing this. I said, otherwise I'm going to have to go work for somebody. I don't want to work for somebody. So I decided at that point to really become a student of the market. And that's where I started, really learning all these different trading styles and techniques and macroeconomics and, global financial policy and all this kind of stuff. Really just to get a better understanding of that, because I didn't want to work for somebody else. It's really what it was. That's really what it amounted to. Seriously. So, again, I finally got around to actually kicking myself and doing a journal there. And I started noticing, again, these things that you don't notice at first, that you're making these emotional mistakes, these emotional decisions, at these different times. But once I noticed that, then I could change it. And that helped a lot. So, yeah, guys, if you think, oh, I'm just going to keep it up here, guess what? The problem is when you keep it in your head, you can lie to yourself easily. And I'll be honest with you, you can do things online. We'd like to do a lot of our stuff with apps and whatever. But if you really, really want the best effect from it, write it down physically. There is a connection that finds itself in your subconscious when your hand is actually writing something and you're thinking about it and reading it and saying it as you're doing it. It's much more effective than doing it online. Let me see here. Oh, yeah, look. Look, Hank was saying the same thing. He says he actually uses a notebook and pen, something about writing it down, but I am old. Yeah, same thing, guys. I think that works in general for a lot of things. You can't really get where you want to go in life without having goals and setting those goals, because those then require you to follow through, right? As long as they stay in your head, though, they don't really exist. When you start writing them down, again, going through that process, it'll help make you a lot more successful in other things that you do in life. Okay? And I know, again, Hank says it, now I'm saying it, it sounds like we're just old, and we are, but it really does work that way. Psychology has all the proof, okay? So, it's these little things that people don't want to do, guys, that are the difference between whether you're a successful trader or not. Nobody wants to do these things. Everybody wants to they want to learn a new technique or a new style because, they've tried one of them, they've half-assed it for a day or two, and it doesn't work, right? Whatever. Don't be like that. Do the things that other people aren't willing to do. That's how you become successful. The successful people have learned that, guys. Those of us that have found success in doing something, we have learned that it's because we do those things that other people choose not to do. Other people can't be bothered to do. They're too good to do, or it's too boring to do it. They don't want to do it. That's where it is. It's consistency in doing the things nobody else wants to do that's going to make you successful in whatever it is you're trying to do, guys. Okay? Understand that. Okay? Yeah. Hey, somebody says it right here. Find someone who's been successful and do what they do. It's what I do. Anytime I want to learn something, I told you guys, I pay somebody, right? I pay for somebody to coach me. Anytime I want to learn to do something right, it saves time, and it means that I'm going to skip a lot of the mistakes that I would make otherwise. And so it's important to do that. You find somebody that's successful, and you get them to help you with that. And usually, I'll be honest with you guys, usually it's going to cost you a little bit of money. Why is that? Because they don't have to do this. They're willing to do it for a price, but they don't have to do it. You see what I'm saying? So stop worrying about it. Look at it as being an investment and just get on it. But then you've got to put yourself into it, guys. You can't go and pay for something and then not really try. You're going to screw yourself out of it. Don't do that. Get in there. If you're serious about it, find somebody, pay them if you have to, and then be serious about it. Ask questions. Really put forth that effort. Do the things they say that you need to do. And if they say do it this way, then by God, do it that way. You may find out eventually that that's not the best way for you to do it, but you are not going to know if you just sit there and, I'm not going to do it that way. The difference between being successful in life and being a whining baby that everybody else, it must be nice, overnight success, all that other silliness, right? The difference between that is consistently doing the things other people aren't willing to do. The other people being all those people out there complaining. Okay? Really. So, this is seriously stuff. This is seriously stuff, and I seriously can't speak, guys. It's been a long week. Well, Blaze, we love having you there, man. And I love it when you guys ask questions, too. Don't ever think, if you guys are in Discord with us, you're supposed to be asking questions. Don't ever feel like, oh, it's a stupid question, or it's a silly question, or I'm bothering somebody. Don't. You're supposed to be asking questions. That's why you're there. I would rather you ask a question and get clarification on something you don't understand than just hold it to yourself because you're worried that maybe it's going to make you look like you're a new trader, right? And you're going to be too embarrassed to ask it. Don't do that. Ask questions, guys. A lot of you ask me, how did you help Scott get to where he is, right? And so Scott already had a basis, right? I mean, he was already trading whatever. All he did was he asked questions. He asked questions. When he had a question, he asked it. That is really what it amounted to. And I answered his questions. And I helped him understand it. That's all it is. I make it sound so simple, right? But in reality, it's a simple thing you can do that can help change, make the difference between whether you're successful or not. In anything you do, again, guys, I'm going to keep saying, everything I tell you about as a trader is the same stuff you can apply everywhere else in line, no matter what you're doing, no matter what job or what skill you're trying to learn or whatever. Ask questions. If the person that you are learning from, especially if you're paying them, is upset at you for asking questions, find somebody else. Because you cannot get to where you want to go if you aren't able to ask questions when you're unclear about things. All right, guys? Seriously. I say all this, and sometimes some of the people get it. Most of y'all I know don't really listen. But I keep repeating it because the more I repeat it, the more of you that are eventually going to just succumb to it. You're going to give in and you're going to listen. And you're going to start doing these things. It's not everybody. It won't even be most people. But there will be a select few of y'all who will listen. And you'll take it to heart. And you'll do these things. And you're going to see that you will become successful at whatever you're applying these concepts to in life. Whether it's trading or whatever else you're trying to do. Okay? Yeah. Stop trying to force someone who doesn't want to help. Exactly. But I'm going to tell you right now, if you're paying somebody to teach you a thing, there's no reason why they shouldn't be answering questions. I'm a firm believer in that. All right? Okay, guys, listen, it's getting late here, so I need to get going. But again, if you are in Discord with us, don't ever be afraid to ask questions. It might take me a minute or two to get back to you, but I will answer your question. If I don't answer your question within 24 hours or so, just tag me again and just say, hey, just circling back around here, because either I might not have seen the notification or I might have seen it and had intended to answer it and then got, a business call or something that I got on and forgot. I'm pretty good at answering those questions within, usually pretty quickly within that day, but definitely within 24 hours. But if it gets beyond that, please tag me again and just say, hey, just a reminder here. And, oh, yeah. Every once in a while, it does run off though because I do so much over here, but it is never intentionally not answered. Okay? All right, guys. I'm out of here. I hope you guys have an amazing weekend. Y'all trade safe. I'm going to run over to Houston for the weekend, H-Town. Again, we're looking to relocate our office over there. So I'm going to be looking at some properties in the, should I tell y'all? In the Woodlands area. Maybe Spring, Tomball, Magnolia, kind of out there. Really like the Woodlands area. Really nice area up there, though. But anyway, we're going to go over there. And, once we get set over there over this next year, I'm exploring, opening a fund. And we'll see how that goes. But I'll keep you all updated on that as well. So, As always, if y'all are in Discord, I'll see you guys. If not, I really do hope you guys have a great weekend. Y'all trade safe. You be safe. Spend some time away from the charts. Spend it with family, loved ones, and whatnot. And then I'll be back on Tuesday, 11 a.m. Central Standard Time. And we'll see what the weekend did to the things we were looking at, all right? As always, remember, the only thing you control in the market is how much you lose. So please keep working on your risk management, guys. Most important thing you'll ever do as a trader, day in and day out. Y'all take care. I will see you next week.